In this episode of OG55, I got Mr. Seymour Duck with me today. We're talking about the most recent Disney earnings call. We're going to break down these numbers, what it all means up next on OG55. Welcome aboard, everybody, to another episode of OG55. We're talking all about that Disney quarterly earnings call. We're talking theme parks. We're talking studio. Before we dive in, Mr. Seymour Duck is here to join me today. Mr. Duck, welcome back, sir.
Hello, and yeah, I'm excited to be here, especially on Disney Earnings Day.
Yeah, absolutely. It's a fascinating situation going on here. But if you could let everybody home know where they can find you on social media.
Yeah, you can find me on X at Mr. Seymour Duck.
There he is. You heard the man. Follow him on X, Mr. Seymour Duck. Great financial analysis, Nintendo, Japanese investments, Disney, all of it. Make sure you check
And
it out.
I'm looking at Swedish stocks now too.
And Swedish stocks, exactly. So there you go. Make sure you give him a follow on X. You're up to like what are you up to? Your follow count now? It's like over 1,000 easily now.
Yeah, 1,200, I think.
Nice. All right, Mr. Duck, let's go ahead and talk about this. This is actually courtesy of our friend Jack over at DSNY Newscast, friend of the channel, and he actually had these beautiful kind of what would you call it, like I don't know, graphics or whatever in regards to the the revenue and the income and all that in regards to experiences in the studio. So I figured we'd go ahead and use his art, but make sure you check him out, DSNY Newscast on YouTube. He also did a great live stream in regards to this topic as well. So, Mr. Seymour Duck, we will start off with parks, okay, or experiences as Disney calls it now. So, gross revenue is $8.38 billion. Now, this is plus 2% year over year. That's the change. Operating income is $2.2 billion, which is negative 3% year over year change. Now, if you want to let, for the layman's out there, if you want to let people know what is gross revenue exactly?
Oh, it's basically the money coming in from the consumers. So they give you the money and they count that as revenue. So you go to Disney parks, spend their money, and that's the revenue from them.
Gotcha. And what would operating income be?
Essentially, their profits that the business is making.
Gotcha. Okay, so these numbers for experiences, what's your take on it?
Pretty good, actually. I was surprised. Because I keep hearing that Disney has brand damage or there's boycotting, but yet people are spending money still at the parks, up 2%. Even more surprising because Universal's revenue was down 10.6%. So yeah.
Yes, it was. This is from friend of the channel, Scott Gooston. Kudos to Scott, because along with us, he's one of the few creators out here that's willing to kind of look at this big picture, you know what I'm saying? Which is essential to analyzing any of this stuff. But he says here, just a reminder from 2 weeks ago, Comcast saw parks business decline 10.6% in Q2 due to lower attendance at domestic parks. The Disney report isn't a shock. Now, this is the thing. A lot of people will kind of say, well, like why bring Universal into this, right? Why? I think it's absolutely vital when you have to bring in, especially Disney's biggest competitor. You have to look at what Universal is doing as well to kind of get a picture as to what is actually going on, right? If you look at Disney and you see, okay, down 3% or whatever, you don't know, is this a Disney issue? Is Disney doing something wrong with its product? Or is this indicative of a bigger industry issue, right? And you're not going to know that if you don't look at anything from outside of Disney. I think a lot of times fans, they are upset with certain things. They say lightning lane or whatever it is. And so whenever Disney has maybe a loss or a dip, they immediately want to tack on their personal kind of grievances to the dip, right? Oh, well, see, it must be lightning lane or Genie Plus or whatever because it went down. And it's like this kind of personal thing to kind of see, that's what happened. Most of the time, that's not what it is. But according to this, it looks like it's more of an industry-wide thing, right? We're seeing it with Comcast, Universal, their parks, which actually saw a bigger decline. That's the thing. Like you said, Seymour, we hear all about Disney not doing things right and they're losing all this business to Universal. Universal had a weaker quarter with parks than Disney did, you know? It's wild. What say you, sir?
Yeah, and like I mentioned in our last video when we were talking about Comcast, Comcast is pivoting to parks, and it's kind of scary to see that dip of like minus 10.6% on the revenue, and then even in profits 24.1% dip for Universal. That's not good when you're trying to grow. Even if you're expanding to Epic Universe, right? I don't think that's enough to fix this issue that you have. Disney is up 2%, even if there's an industry-wide issue, and especially in the U.S. where inflation has gone up and the Fed hasn't cut rates. Like every other country I know has cut rates besides Japan, but that's a whole different issue. They're increasing rates because they were negative for the longest time. But like US is the last one to cut rates. And you can even see that, the revenues from the parks that are coming on from Disney, they were down domestically, right? Just like Universal, but internationally they gone up dramatically to the point where it covered the gap that domestic park numbers were gone. So yeah, for Disney, that pricing power, that brand power, the wide moat of a company with those strong IPs. Yeah, that this is it. This is what Disney is Disney for, because you're seeing it even during a wide industry trend of, people, cutting down on costs. They're still beating some numbers.
Yeah, and this is now. What happens if we do get into a recession, or what happens if 2025 is pretty rough economically? And that's the thing too. It's like we're leading into some pretty iffy economic waters here, and they're going to open Epic Universe, I'm assuming in the spring or summer of 2025. Like you said, they have a lot of ground to make up. Universal, they're not going to make that up with Epic Universe. There's just no way.
Yeah,
I mean,
sorry. I was just gonna say, and it's not just a Disney park or a park in general issue. You can see in Starbucks, Hulu, Nike, not Hulu, Lululemon, Nike, McDonald's. You can see that all their sales have been dropping dramatically because people can't afford it. They can't even afford to go to McDonald's anymore because pricing is so bad. They go to the grocery store, buy noodles, and make it at home because it's just so much cheaper. Even for me, it's like I can't even go to the grocery store. Sometimes I go to Uber and order from some restaurant that's giving me 40% because it's cheaper than the actual grocery store.
Right, exactly. So Sean Nyberg here says Disney earnings nice surprise with early streaming profitability. That's another thing we got to talk about, streaming profitability. But it says here the parks were not as soft as expected. Disney still grew their park revenue year over year plus 2% and only shrunk their income by just 3%, compared to Universal's park revenue shrinking 10.4% and income free falling at 24.1%. This is wild to me. I mean, when you're on X or you're in the fandom, it's like you feel like Universal is like the top dog right now, and Disney's just this battered, beaten entity. And it's like you look at the numbers, and it's telling you a completely different story.
And also, I wanted to let you know that Disney in their last earnings already stated that their outlook was going to be softer for domestic parks. So this is already priced in. They have already told us this was going to happen.
Right, exactly. And here's another graph is a Q2 comparison revenue and income for Disney and Universal theme parks. He says here, when you compare the revenue and operating income that these two theme park companies generate, you can see that there is truly no comparison. Disney is on a completely different level, while Universal fits closer to Six Flags and SeaWorld. What say you about that in terms of what?
This is exactly what I said last time when we were on Comcast. I said Disney's a completely different beast. It's the parks, like, even though it generates like almost 30% of their revenue for the total company, right? They're doing pretty good. Disney has a wide moat. They have their pricing power, and this is why they can compete. But it's an issue for Universal Comcast because, like Sean said, they're more like Six Flags and SeaWorld, and they're trying to pivot away from that. They want to become a Disney competitor, right? But if you're getting these numbers that are showing minus 10% revenue, 24%, net income, that's not good when that's supposed to be your growth sector along with streaming. Because let's be honest, nobody's watching TV anymore, right? Nobody
Right,
has
exactly.
cable or IPTV. Well, legally, of course, but they don't have. Nobody's paying for that. They just have streaming. It's just so much cost effective, to just have a streaming service. I only have two streaming services, Netflix and Disney Plus. Disney Plus outside the US and Canada, you have Hulu built in at no extra cost. So I'm just watching that and I'm like, I'm fine. I sometimes forget I have Netflix because my family's paying and I'm the additional subscriber that you have to pay for $7, but they pay for it. But yeah, most of the time I'm on Disney Plus and that's all I need. I don't need anything. Disney Plus and YouTube most of the time. But yeah, for a company like Comcast, where a majority of their business was Xfinity, that's concerning, and linear, right? So you're gonna see a lot of cancellations for cable and TV, and they're gonna see a lot of cancellations for linear. Like linear is dying, even for Disney, right?
Right.
Like I'm not gonna sugarcoat it. Linear is dying for all companies, for all media companies. They're pivoting away to streaming. And even you can even see Disney trying to put in a little bit of live TV in there. Even for the presidential debate, they said they're going to put in ABC News for free, 24 hours, 24/7 on the Disney Plus streaming platform, so you can watch it. I see them testing out like Dancing with the Stars, but you see the future is that they don't need that linear middleman where they have a Xfinity provider, right? Or and then you have Disney, the middleman, coming in and doing all this work. No, they cut that all out, and they're now providing the service for you.
Yeah, no, exactly. And that's what you said. You said that recently in a video. I think it was the Universal earnings call, Comcast earnings call, when we were talking, and you said that Universal is expanding their parks division so aggressively because they see that broadband cable company division of their company is failing. And it's becoming obsolete. And that's a huge part of their business. So now they're trying to pivot, right, and get into this park thing, which that's what makes it even worse that they're seeing these losses, because they're trying to get into this other thing because their main thing is not doing great. And now this other thing that they're trying to get into is now seeing losses. It says here, this is from Sean Nyberg. He says, if Universal is seeing their income shrinking by 1/4, I do not see how they are justifying Epic Universe. Clearly, their current parks are not bursting at the seams. In fact, they are shrinking, which makes such a large expansion seem desperate and reckless, which is what you were saying just a few weeks ago. Desperate and reckless. They're expanding not because they're so, they're just doing the fans a solid. We want to make more stuff for you guys. They need to, right? If you want to elaborate on that, Seymour.
Yeah, and it's very concerning because, like you said, it's getting desperate, and they have to expand so quickly. So that means they have to spend a lot of money. But then it gets to the point where it's like, well, you're almost doing it too quickly, where you're gonna hurt your own parks in like your domestic parks, and then the quality will go down as well. There was rumors that the UK park, the British Universal Studios park, they said that it's not going to be any licensed IPs. It's just going to be original IPs because they're trying to make it cost effective. Though that's just rumors, but that's the type of things I hear and see online because they're trying to expand so quickly. Maybe they'll get the licensed IP later, but it's not good.
No, it's not. It's not good. And as fans, it's ear candy to hear, oh, they're building another park and another park and another park. But that's not always necessarily a good thing. You can saturate something. You can saturate the market. You know what I'm saying? Go ahead, Seymour.
And I'm afraid that they might make it like, the kids park at Universal for Texas. I don't want that.
I know, and I have opinions about that park. I mean, like that. This is the thing with that park. It looks like the DreamWorks area they just built over there at Universal in Florida, right? Kind of cheap. I think that's kind of like the roadmap, so to speak. The new DreamWorks land that they have over at Universal or Orlando. I think that's the roadmap for what they want to do for this entire park over there in Texas. I understand it's a different demographic. I understand it's for kids, like toddlers and stuff like that. That Legoland sort of demo. The thing though is, and I've said this before, you don't talk down to kids. Like Walt Disney never did that. When he made movies, he didn't like cut corners because, well, it's just for kids. They won't notice. You know what I'm saying? When he made Bambi, when he made Snow White, when he made these movies, he made them with quality, regardless of whether or not kids were going to watch them. He didn't talk down to kids. Even at Disneyland, the Fantasyland dark rides are probably technically for maybe kids, right? But they're quality attractions. They're not cheap. I think it's a brand issue when you're building a park in Texas and you're building it on the cheap like that, and your justification for that is, well, it's for kids. No, you build a park that impresses people, that has quality in it. You know what I'm saying? And so far, from what I'm seeing, and I could be wrong, and if I'm wrong, I have no problem coming back and saying, hey, OG was wrong. From what I'm seeing, though, it looks like that Texas park is going to basically be the DreamWorks land at Universal Orlando, basically just bigger, and that's really cheap, and that damages the brand. All those people in Texas are going to be visiting that Texas kids park, and that might be their first foray into a Universal park. That will be a lot of people's first impressions of what Universal has to offer in the theme park space. So you're introducing their brand to a whole new audience in a whole new part of the country, and that's the first thing that these people are going to see is that kind of quality.
Yeah,
that stays with you. You know what I'm saying? Go ahead, Seymour.
Oh, I don't agree with that. I don't agree with the quantity versus quality, right? I want a good quality park, not some cheap looking park because you need to diverse your park segment of the company, so you're making those little smaller parks all over the place. No, I rather it's like the movie in the streaming, right? You'd rather focus on the quality now and not the the quantity, because I don't think the quantity is going to outpace it. People want good parks, good quality parks, and you want them to keep coming. I think it's a one and done issue where you go to the Texas park, you see it, meh, and then you leave and you never come back because you realize it's not that great. And then you probably go to the Universal Studios in Florida instead.
Right. Yeah, 100%.
To me, it's a waste of money to focus on little parks like that. You already have parks like that. You have, the Six Flags, the Cedar Points, those are the parks that you want to go to if you don't want to get the quality experience.
Right, exactly. Yeah. The cheap parks, that you can go to, you already have those. Like you said, there are regional parks all over the country that offer that.
I mean, Universal extend. Food's expensive there still.
Well, yeah, that's true. That's true. Absolutely. Yeah, but I mean, if you're Universal and Universal's capable of building a quality product, we see it with yes. Harry Potter and Nintendo and stuff. It's like, why would you want to get into this market of like kind of lowering the Universal brand into this regional kind of park quality when you're already light years beyond that? Like Universal, I'm standing up for Universal. Right now, I think Universal can do better than what they're offering in that Texas park. Why not build? If you're going to go to Texas, you have all that land. Why not build a traditional Universal park on par with the Harry Potter and the Marios and the Donkey Kongs and all that? Build something of quality. Give Texans and people of that area the true Universal quality experience. Instead, you're giving them like Universal Light, and that's people's first impression of the Universal brand, the people living in that area, for a lot of people. You know what I'm saying? And you want to talk about like, damaging the brand. I think that damages the brand. I think it damages it big time, so we'll see. But we have entertainment here too. Q3 entertainment gross revenue, 10.5 billion plus 4% year over year. And then we have operating income, 1.2 billion, 194% year over year. What are your thoughts on this, Seymour? This is wild, bro.
Bob Iger's plan to fix the spending issue, it's working. He's pivoted from what Bob Chapek did. Bob Chapek and his friend, I keep forgetting his name.
Kareem Daniel.
Yes, they wanted to spend a lot of money to the point where it was sacrificing, the business itself from other sectors just to invest in it. And now streaming, and even to an extent movies as well, because now they didn't have enough budget for it. But now that they're focusing on quality versus quantity, you're starting to see what's happening here, right? The profits are coming back up.
Right. Exactly. And
I said it. And if I'm not mistaken, this is linear mixed in with streaming, mixed in with the movies.
Right. And I've said it for a long time. Literally, I've said this for years. Okay. Like for years and years and years. Because I'm heavily involved in the theme park community. Right. And I've been making videos since 2016. And I would get comments on my videos like in 2016, 2017, 2018. OG, you don't get it. Disney's like, it's a theme park like company now, or the theme park should be their main focus, basically. The entertainment side or the studio side doesn't really matter that much anymore, right? And it's like, and I've been hearing this I'm telling you, years and years I've been saying this, since like 2017. Like, no, that's not the case. Disney is a studio first. The studio is the IP machine of the whole heartbeat of this entire flywheel. If you don't have the studio running on all cylinders, the whole thing falls apart. Because what are they building these attractions in all these theme parks based on? It's based on the IP that the studio creates, whether it be Disney, Marvel, Star Wars, Pixar, whatever. It's all based on the studio product. You need to get the studio up and running. Look, even if you look at the Disney Renaissance era, right? When Michael Eisner came in and fixed Disney, right? What catapulted Disney to new heights? It was the studio. It was when Little Mermaid and Beauty and the Beast and Aladdin and Lion King started to gain traction, and then their parks were able to expand. It's the studio that fed that whole machine. You know what I'm saying? It's so when I see people say like, well, they should just focus on theme parks. No, you have to focus on the studio. You have to get that right. And the other stuff will fall into place, because now if you got great content coming out of your studio, now you have great content you can build in your parks, because now you have the next Moana or the next Frozen. So now when you build your theme park attraction to the next big IP, now you're boosting your theme parks, because now that mega hit IP is being built in your parks. You have to focus on studio, and it's really refreshing to see that they are actually getting it right, and they're having a much better year this year than last year. It's wild, absolutely wild. So,
and something to note: this number of revenue is bigger than they do for the parks. So people are spending more money, like we mentioned, the gross revenue. It's the money coming in from the consumers. So when we were looking at parks, it's the money that people are spending in parks. 10.5 billion is the consumer spending on all the entertainment that Disney provides. They spend more money on entertainment for Disney than on the actual parks itself.
Yeah, so this is what you're saying, right? Seymour, for experiences, right, which is like parks and cruises, it's 8.38 billion. And then for experiences, for the entertainment, we're doing 10.5.
Exactly. And I find this actually, for operating income, even the revenue going up 4%. When linear dying on a rapid pace, they were still able to increase it on both sides. And it's because streaming is now profitable, right? All three streaming services together are making money, and that's tremendous. And it was profitable last quarter, but only for Disney Plus and Hulu. Now it's profitable if you add all three services. So their whole streaming direct-to-consumer sector is profitable. And even Hugh Johnson went on CNBC and said that that's going to keep going up and up, even though that the Disney parks are going to be flat throughout the other months. Right. And sometimes I feel like they're sandbagging the numbers. Sometimes when they say that, when they Disney parks will be lower expectation, just in case it does, because you don't know if with inflation or if the Fed is going to actually cut or not. So they're lowering the expectation. That's what I believe Hugh Johnson was trying to do on CNBC, so that people are not expecting a huge beat, just in case they don't actually do that.
So what you're referring to, Seymour, correct me if I'm wrong, when I think they were saying today that they're expecting the next couple of quarters to be kind of soft on the park side, right? Or experience. Okay, so you think they're kind of just setting the bar. They're kind of setting it, lowering expectations. Yeah. And kind of almost hedging their bets, just in case if it does happen, hey, see, we told you. And if it doesn't happen, see, we beat expectations, basically.
If your expectations are so low, you won't be disappointed if they actually, miss. Or if it's so high and they miss, it's actually a bigger loss. So that's what they're trying to do to prevent it in the future, so that the expectations, that's why the stock went down today, is because of that. So now the expectations already priced in, the stock got dipped. So now if they beat that, And if they beat it tremendously, because it could be an industry trend, but the industry trend could end it like dramatically when the Fed cuts. And then sometimes if the Fed cuts the interest rates, all the people who want to been saving money in their savings account, they're going to take it out. They said, okay, well, they're cutting the rates. I'm not getting that interest rate anymore. Let me go spend my money now that I've been saving all these years. And then now more people will be spending money. They'll go to Nike and buy shoes. They'll go buy the yoga pants from Lululemon. They go to buy McDonald's again because they've been saving, because they know that we're almost. Some people think we're in a recession. Some people fear that we're going into a recession. So we don't know what's going to happen, but I believe that's what Hugh Johnson was setting that expectation. But he did say that softer guidance for the parks will be overtaken by streaming, by growing and growing and growing. And the day before, yesterday, they already increased pricing. So if profitability now for these streaming services is already that good, imagine after the price increases.
Right. And that's the other thing too, right? And that's why it's so important with a company like Disney. The flywheel is so important. When people say just focus on the parks, that's what feeds the whole thing. Well, here's the thing. There's times when the theme parks are really doing amazing business and it is offsetting losses from, say, the studio. Maybe you can even say that you can make that argument, not even make the argument. It did happen last year, right? But then there's times like when we had the lockdown during the pandemic. Well, what was keeping the whole company afloat? It was Disney Plus on the studio side and the streaming side. That's what's keeping the whole thing, because the parks were all closed. So now we're entering another time where, hey, maybe it'll be a little softer on the park side. And it looks like the studio side is doing better. So now the studio side is going to offset some of this stuff for maybe a softer park thing. But see, that's all the beauty of the machine of how Disney is set up with this flywheel and how diverse they are, is that they can do that. That's the beauty of it. That's why when people say, well, Disney should spin off their parks, that's why it's such a bad idea. It's such a bad idea. Disney is successful because it has the diversity with this stuff, with the parks, with the studio, where if one thing starts to fall behind, the other thing can kind of offset that. And it happens over and over and over again. So,
yep. And you see Comcast trying to do that, but it's not working, unfortunately, right now. The parks are not growing. Their streaming service is still not profitable. Even Warner Brothers Discovery streaming service is profitable. But yeah, Peacock is not profitable. And I don't even think they've been investing that much. They're trying to put sports into it, but I don't agree with adding sports for free, because that just costs more money, and that's what Bob Chapek did. He spent a lot of money, and it hurt the profitability of it. Disney right now, they don't feel like they need to grow their subscribers anymore. They're comfortable with the subscribers. They actually exceeded expectations, and now they're trying to grow profitability from that, and they're not trying to be another Netflix, but they're trying to have another sector in their business where it can become another cash cow, just like the parks. So then they can invest in another revenue stream, which I think is going to be gaming with Epic Games. They announced today also that the additional 1.5 billion they announced before in their earnings call, that's in total they own 8% of Epic Games. So they're heavily invested in gaming now.
Yeah, which is fascinating. I also want to bring up to you, I want to ask your opinion, Seymour, on, and we haven't really talked about this, but like the possibility that Disney's going to have to fork over another $5 billion possibly to Comcast for this Hulu thing. What are your thoughts on that?
That depends. If the appraisal, it's strange. I see a lot of people talking about it now because Disney mentioned it in their earnings call. But yet it was actually old news. They mentioned it before too. They mentioned it like many months before, even when they gave the check for Comcast for the Hulu. Right. They both stated they're going to have to do an appraisal, and they have their own people to do it. Right? They have Morgan Stanley, and then J.P. Morgan. I think it was Comcast, if I'm not mistaken. And they were doing their own appraisal, and the difference was too big that they have to have a third party coming in. That's old news. And they announced that they might have to pay the $5 billion extra if the appraisal for Comcast is more to their liking of the third party. But this is all old news. I don't understand. I see a lot of headlines saying, "Oh, Disney might have to pay." but then they don't read beyond the headline and actually read it that this is actually old news, and Disney is just telling their shareholders, they don't want to be unexpected and say like, look, we're just going to tell you that there's a third party and they might go with them, but we still believe that our pricing floor value that we paid for already to Comcast is fair. This is old news. I don't understand why everyone is getting like I don't understand why everyone is so like the sky is falling because Disney has to pay for this.
Yeah, no, it's fascinating. Yeah, this whole thing with yeah, I remember they said that when this whole thing was announced, like over a year ago or something.
Yeah, it was last year when they were talking about this is old news, and then they stated in the like earnings call many times before, but they were just saying again that like, oh, there's a third party involved. We just want to let you know. They're trying to be transparent with their shareholders, and then apparently because they're being transparent with their shareholders, people are now bringing it back up as if it's new news. It's not. It's old news. And I find it funny because like, oh, $5 billion. At the same time, Warner Brothers Discovery lost $10 billion today, but nobody's talking about that.
I was gonna ask you about that. And see, this is the thing, right? It's like when you look at all this stuff, right? And you hear all the noise about how Disney is like this failing company. And then, but if you really like zoom out and you start to see, well, Universal's park numbers last quarter, and then you have, Warner Brothers with that, was it it was an impingement charge or something that Warner did today, that it was a $10 billion. Go ahead. You can explain it better than I could.
Basically, they put that charge in because they're saying that their assets for linear has decreased in value over the years. So they're putting that charge in and they're going to get like a big tax credit after the fact. Because they're like, oh, we lost money. Like they lost money. It will be on their balance sheet that they lost money, but it's because their value Disney has done it in the past too, but not as big as 10 billion.
That's huge, man. I was kind of shocked at the number. I wasn't shocked at it happening. I was just shocked at the number. It seems like that's massive.
But to be fair, Disney has done it in the past, where Bob Chapek has put so much shows on Disney Plus. And Disney did the same thing, saying that some of these shows are not worth it. The value has gone down. And, they did the same thing, but not as big as 10 billion. That's wild. And especially when, Warner Brothers Discovery is this significantly smaller company. And right now the company's worth $18 billion, right? That's before the 10% dip after hours. So imagine you just announced we lost $10 billion. At a company that's only worth $18 billion. That's wild.
It's crazy. and there was already rumors like from a couple of weeks ago that they're thinking about spinning off some of this stuff with Warner Brothers, right? Like the streaming and studio and other stuff. Like they were going to spin stuff off. So Warner Brothers has been really going through it, And I like Warner Brothers. I like it as a company. I love the IP. I said it so many times. I think Warner Brothers IP is second to Disney's. I think the Looney Tunes and those classic characters have been so mismanaged over the decades, really since AOL bought them in 2000, I think it was. It's a great Warner Brothers is a great studio, but it's been plagued with this bad management for like 20 plus years. But you look at these other studios like Warner, you look at like even like Universal with the issues they have, and it's like Disney's not doing that bad. Now look, it's not all roses and rainbows over here at Disney. Like obviously they have their issues too. Obviously there's challenges ahead. Like we were talking about the parks, it's to be next few quarters are going to be soft and this, that, and the other. But you got to put things in perspective. You know what I'm saying? If you just look at it's like if a patient comes into your doctor's office and says, I have a migraine, and you just jump straight to like, oh, well, let's have brain surgery on this patient. Well, you got to look into stuff and kind of see what's going on, because it might just be, hey, they're dehydrated too. You know what I'm saying? And when people jump to conclusions with the parks, like, well, see, Disney dipped. It must be because of Lightning Lane. It must be because people don't like the Disney brand anymore. Like, it's so easy to jump to these conclusions when you don't look beyond like just what you see in front of you. Yeah. So that's why it's important to look at Universal, how their parks are doing. That's why it's important to look at Warner Brothers and to see what the industry is doing, because it gives you a better picture of what Disney's doing. Go ahead, Seymour.
Oh, and I just wanted to state like the actual revenues and total revenue and total income before taxes in comparison. You know how everyone, I keep hearing it on X, boycott Disney, Disney's destroyed, brand damage, right? But yet I look at year over year revenue, right? It went from 22.3 billion to 23.2 billion. So revenue has gone up for the total company. And then income before taxes, right? Profit, it was 100 million loss to 3.1 billion. So I don't understand where the issue here is that that's actually happening. Bob Iger is destroying the company, yet they just went from a loss from last year to a profitability of 3.1 billion before taxes. That's amazing, and to the point where it's like, I even thought about buying the stock because I'm seeing the progress with the Disney stock goes right with the profitability, the revenues going up, even after so many times. Elon Musk saying go F yourself to Bob Iger, and everyone wanted to boycott Disney Plus. They said 3 million users down. No, yeah, they're fine. They're perfectly fine. They're doing better than ever. Parks are doing better than they did pre-COVID. Streaming is now profitable. Like, where's these issues? Disney's doing better than ever, and they've been paying down their debt. They've been paying dividends, right? But yet the only thing they want to focus on is Hulu. Come on, the $5 billion, that's a drop in the bucket for what they're making now. They made $3.1 billion. They're gonna fix that, even if they have to pay $5 billion. Don't worry about it because they're making their money back now. And this doesn't even include the Deadpool or Inside Out 2. Imagine that next quarter when we actually have the numbers. Only 1 week of Inside Out 2 is included to these Q3 earnings. The next quarter,
yeah, that's crazy.
So next quarter, you're going to see all that money coming in, plus the streaming going up, and people just want to focus on the softening of the parks domestically, even though it's up overall. And then they just end the Hulu headline. Like, seriously, look at the actual numbers. Go past beyond the headlines.
Right.
And you will see that Disney's doing perfectly fine. So much that I almost sold half my Nintendo holdings to buy it. But I still haven't bought it because I still don't trust the management. I don't know what's going to happen. Yes, I don't trust Bob Iger. Even though some people were saying that, I'm a Bob Iger
you're a shill
man.
or whatever.
Shill, yeah. No, I actually sold because I don't trust the management, and I don't trust the next CEO coming in without knowing the facts, because I don't want another Bob Chapek coming in and spending so much money. And I know a lot of investors right now, even potential investors, they don't want to buy in because of that. But I almost did. I almost bought in because these numbers are great.
Well, yeah, and I would say, and speaking of the CEO, I'm glad you brought that up, Seymour, because that actually is a huge concern for me as well. Actually, I think the uncertainty of that whole thing is really is dragging down the stock. I think if they can get out and make that announcement in the next couple months or few months, it would be great, because then we know who our person is that's going to be running this after Bob Iger. Bob Iger can kind of go in there. It can kind of mentor this person for a year plus or whatever they need it for until Bob Iger leaves. I think they really need to start announcing. I mean, do you think they have internally, do you think they know who the candidate is, or are they still kind of tossing the names out there?
Maybe or maybe not. I don't know, to be honest. They can change in the last minute. I don't know. Disney will do it when they're ready.
Yeah.
I don't think they want to screw up this time like they did with Bob Chapek. So when they announce it, they're going to be confident. I'm hoping they're going to be confident about it, and because they want to, indulge that trust to shareholders and fans, right? To that, the company's going to be run by someone who knows what they're doing.
Yeah. No. Absolutely. Yeah. Right now, I mean, if I were to pick anybody that of the known candidates, I would probably pick Dana Walden, just because I think she's handled her division very well, and I think we do need a studio person running Disney. I think historically it's worked the best. And
I do see some things that Bob Iger did just to ensure it's not going to have another issue like Bob Chapek. They brought in Hugh Johnson, and that guy, even people on CNBC say good things about him, and that doesn't happen for people in Disney. For CNBC, they've been trash talking Disney all day this morning about how the parks are bad, but yet they didn't focus on anything else. They're focusing on one sector, but then they were praising about that Hugh Johnson because they're good friends. Hugh Johnson, like I mentioned before in many of your videos, look at his track history. He's been working at Pepsi for the longest time. People know him in the industry. and people know him even in CNBC. And I think Bob Iger put him in place for that purpose because they don't want another Bob Chapek and I forget his name already again.
Oh, Kareem Daniel.
Yeah, to spend money not wisely. No, he reminds me of Tim Cook from Apple. And Tim Cook, when he became CEO of Apple, he took the company to higher heights. Became $1 trillion company, a $2 trillion company, and a $3 trillion company. Yeah, and I can see that with Disney, with Hugh Johnson. I don't think he's going to be the CEO, but I think he's going to be high up there with Disney for long term.
I hope so. I'm happy with him so far. I'm really happy, and he did amazing things over at Pepsi. So,
and he's doing better interviews than Bob Iger.
yeah, he is. Yeah, he is. Yeah, he does a good job on the CNBC interviews and stuff because that's and they like him, But those CNBC interviews are rough when it comes to Disney stuff.
Yeah.
Like you said, they were trashing Disney today for the park stuff. It's like your parent company didn't do any better in the park stuff this last quarter. Where was the same passion, CNBC? You know what I'm saying? It just, they drive me crazy over there. They absolutely drive me crazy over there. But it is what it is. I mean, they're owned by the big, Disney's biggest competitor, so I guess it's to be expected. The issue I have with it though is that I feel like CNBC holds a lot of weight in the financial community, and I feel like it is a little bit of a conflict of interest to have, Disney's biggest competitor kind of reporting on Disney stuff, So I don't know. I mean, I guess technically you could say the same about ABC, but I don't think ABC has the same kind of like financial news clout that a CNBC does. You know what I'm saying?
Even social media companies too, right? You can say Elon Musk owning X and then, saying go F yourself to Bob Iger. It could be the same thing.
Oh yeah. Oh, that was hilarious when you said that he tried Seymour. He tried to work it out. He for 2 years he was trying to work out a peace deal or whatever he said, and now he's got to sue. And it's like, Elon, come on. You told these companies to go F themselves. Okay, he was super aggressive. He even said in that clip from a while back, he didn't even want these advertisers.
Nope.
They can go F themselves. He doesn't need them. He doesn't want to be blackmailed. Okay, but now you're suing? So what is it, Elon? Do you want him on or not? He
doesn't want them. He needs them. That's what's happening.
Oh, he's panicking, huh?
Yeah, he's panicking. He needs them. And he shouldn't have, if I was him, I would have done that. Look, I'm not no Elon Musk, but Mark Zuckerberg had the same issue in 2020 with the boycotts, with the advertising, because of safety and monetization for the on the monetization for the platform for Facebook and like Instagram, and they work with the company. He added more safety tools, and it got resolved. They even brought back Apple. Even Apple was boycotting them for the longest time. Even Tesla advertises on Facebook, but people ignore that as well.
Yeah, well, supposedly CEOs of big companies shouldn't get political. But apparently it's okay for Elon, though. He can spout off every day about politics. And it's perfectly fine. But Bob Iger and Bud Light and any other company, for some reason, it's not okay. But Elon gets a pass. He can say whatever politics he wants, and no one's going to call him out on it. It drives me nuts, the double standard, So I wanted to bring up this one last tweet before we go, Seymour. This is actually a great user on X. Jack tweets 44, who's actually, I found out about him through our good friend Alia. A great follow. Definitely check him out on Twitter or X. He says here, conclusion, Disney's earnings this quarter, while definitely a huge success. That's interesting. He said huge success. Do indicate a mixed reversal of fortunes for the three main Disney divisions, with entertainment and sports returning to profitability in DTC, while experiences begins to feel some drags in the parks. He goes on to say that's not unfixable though, and Disney is heading in the right direction. The question really is, what will they announce this weekend at D23 for both the entertainment and experience divisions? Both will be crucial to reinvigorate audience interest and thus share confidence. So he's pretty bullish. I mean, that's crazy. He said huge success for this quarter. That's wild.
I thought that. Remember, I even said I wanted to. I almost bought the stock, but I haven't because I'm just a little bit more biased for Nintendo. But Disney's doing great work. They're fixing the issues. My only issue is that Can they continue that with the new CEO? I don't
Right.
know. And I'm not here to. I know Disney will be fine in the future. No matter what happens, they will fix it. A company like Disney will not go and crash. They're going to fix the issue no matter what happens. But how long it's going to take is my issue. And waiting too long, your stock is flat, not going anywhere, and fans getting upset. You don't want that. But it's the unknown, the uncertainty that I don't like. And I am sure a lot of investors feel the same way.
Yeah.
But they're going in the right direction. Plus, the parks, even though let's be real here, the streaming service were so much losing money last year. Even when Bob Chapek was CEO, this is a small drop in the bucket of what happened to the parks. It's not that big of an issue. Like, people are making it seem like the sky is falling. Disney's in trouble. No, they lost 3% of profits. That's it. And the revenue actually went up. They can fix that's like almost a margin of error. They can fix that in next quarter or next year, right? They can fix that. They can reinvest back into the parks, ensure the money that they already provided, right? They're going to fix that, ensure that people come back in. Interest rates are going to get cut. People are probably going to spend more money. It'll be fine. The 3% is nothing. If you get numbers like what Universal got, that's when you have to be concerned. But it's not there.
Yeah, no, exactly. You're right. That's a great point. That 3%, it's almost like a margin of error at that point. You know what I'm saying?
Yeah. And like you saw with the entertainment, 100 and what percent, that it was over 100% in going up in profitability,
right,
in profits, and down 3% only for the parks. You see the dramatic shift. The parks are only dying, like softening so little. It's not that, it's 194%, right? And this doesn't even include Deadpool or Inside Out 2. And it's only 3% down. You see the biggest change?
Yeah, it's only 3% down, and this is up 194%.
Yeah, exactly. So it's overtaking it. The streaming is working. It is working. Even though I've been told many, many times that they have lost money. They lost over 5 billion, 10 billion, 14 billion. And it's like, that's not exactly true, because they invested to a platform where they created content, and that content is still on the platform. You can't really say you lost money when you invested it in.
Right. No, exactly.
It's like saying you lost money for paying, you bought a house, and then you're saying you're paying rent for it. And then you're saying, oh, I lost money every month. No, you didn't. You're investing back into that house to pay it off.
Well, exactly. And it's like what I said before too, where it's like the studio, and I put the streaming stuff in with the studio, but that is such an important investment. Like there's so many theme park fans, Seymour, that blow off the studio stuff. They think that the studio stuff is just like a waste of money. It's like, it's not. It is Disney. Okay.
And especially when the non-hardcore Disney fans, the normies, I guess, rather they go see a movie or a streaming service than go to the parks, because the parks are much more expensive.
Right. Yeah, theme parks aren't for everybody, but movies and shows are more everybody. You know what I'm saying?
Yeah.
I mean, everyone watches content. And even Roy Disney, the nephew, I've played it so many times. I want to play it again. I'm gonna repeat the hits, because even Roy Disney said
the real heartbeat of this company was, is, and will always be the film business.
You heard it from the man. It's the film business. It's a studio. It's so important to put money into that and to make sure that is right, and that's chugging along. It's the most important thing. And like I said before, if you don't have a good studio and they're not making successful IP, the entire flywheel falls apart, because now your parks don't have any relevant IP. One of the big things when Bob Iger became CEO after Michael Eisner, one of the things, he was watching one of the parades at one of the Disney parks, and he was saying he noticed that all the characters in these parades were Pixar characters. Were Pixar characters. And it's like, he was like, how come we don't have any Disney animation characters in these parades? None of the Disney animation characters are relevant. That's a huge thing. You have to make sure that your IP, your content in theaters, on your streaming services, all that, is relevant and really successful, because that's what feeds your theme parks. And now more than ever, Disney is obsessed, and Universal too, which is IP, IP, IP. Gone are the days now where you're gonna like get like a haunted mansion kind of attraction, or it's not based on a movie or something. Those days are over, and they've been long gone. You know, they depend on the IP. The studio is more important now than it's ever been. So. But fascinating conversation, Seymour. It's always a pleasure talking to you, brother. Any final thoughts before we get out of here?
Yeah, it's just tremendous earnings. I know some people might say, the softening of the parks is the sky falling for domestic, but no, it's fine. It's doing pretty good. The only thing I would say is that hopefully the streaming continues going up. If it continues going up, then you don't even have to worry about the softening of the parks.
Right.
I think like that's the number one thing people are concerned about. It's like, the CEO, and then ensuring that profitability for this new sector that they had, and they never had before 2019, keeps growing in profitability. And if that goes, and then the numbers are just going to go up. They want to become, like I said before, they want streaming to become the next cash cow, so that they can rely on streaming and the parks.
Right. And we even heard today that interest or viewership in the original Inside Out and Moana was bolstered by, like, for example, Inside Out 1, more people went on Disney Plus and watched Inside Out 1 because of the new movie that's out now. Right. I think we shared that in the DMs, right? If I'm not mistaken, you saw that as well, Seymour?
Yeah. The domestic numbers actually gone up for Disney Plus.
Yeah, but it's if you have successful movies in theaters, like, a sequel, like, for example, like the Lion King live action, it bolsters the Disney Plus numbers too, because people get on their streaming services and they're like, well, we're going to see Inside Out 2. Let's watch the original movie first, and things like that. So it's all connected. It's all connected.
Actually, I agree with that notion that people watch Disney Plus to watch, families and especially parents would watch movies that are already out on Disney Plus. And then when they hear about a new movie, they watch the previous ones to ensure that it's family friendly, sure that it's good for the kids, the quality is there, and they will go and watch, like, say, Inside Out 2. Or even if it's not family friendly, like Deadpool, right? I am sure a lot of people signed up, like they mentioned, right? Sign up for Disney Plus to watch Deadpool 1, 2. And then they're like, this movie's actually really good. They might have not even seen it, right? They just heard good things. And it doesn't cost so much for Disney Plus compared to a movie ticket, right? I think it costs almost the same, right? 1 month, it's almost the same price as getting a movie ticket now, depending where you live.
Yeah, just about. Yeah, for like one person probably,
Yeah, and then you just get it home, get a pizza. You don't have to pay for those overpriced movie theater concession. But yeah, and that I always thought of that. It's almost like an advertising tool to ensure that the people who watch the content on Disney Plus can watch it elsewhere. It's the flywheel, right? So It's almost like Inside Out 2. I won't be surprised if there's actual Elemental 2, because that was number 1 on Nielsen charts for the longest time, for many weeks. And even though it was it was soft during their release of the opening, but had legs, I think people saw it on Disney Plus, and they saw it consistently on Disney Plus, the point where I think the sequel will outpace the original. And I think that's what happened to Inside Out 2 as well. They saw the original, and it got increased.
Yeah, and that's the thing too with Disney Plus, is that it's oftentimes used as a digital babysitter. So like Moana and stuff, people just play those on repeat for their kids, and stuff. So it's just, the numbers are just absolute bangers. So it's crazy. But Seymour, always a good time talking to you, brother. Really glad I got to bring you on today to talk about these quarterly earnings. It's really interesting to see the comparisons and everything with Disney and Warner Brothers, Universal. But if you let everybody home know, if you can remind them where they can find you on social media.
Oh yeah, and just one more thing.
Sure.
The one thing that I'm excited for, that I hope Disney does something really well. They might announce it on D23, but it's their investment in gaming. Because gaming is actually more profitable than media. The profitability goes from like the first one is software, then media, but then what if you combine the two and you get gaming? That's what you essentially get. You get media, but at a software level margin. So it's much, much cheaper to produce a video game than a movie. And you don't have to get the actors. You can get any voice actor, and you don't have to pay, those names, and it's cheaper to produce. It's a lot cheaper, and I'm hoping D23 we get to know more because they've spent a lot of money on Epic Games, and I'm hoping that's the one thing I wanted to know about this, and that's almost why I wanted to invest as well, because it's like if that sector grows, then it's going to be a completely different company. Because there was rumors, right, when they announced it that this is going to be like a digital theme park. This is going to be, it's like the in between. Somebody who wants more than just a streaming service or a movie theater, but someone who can't go to the parks. They get that in between, like people who go on Roblox or Fortnite. And that's going to make tremendous money if Disney can make that happen.
Oh yeah, it's gonna be huge. Gaming, if they can tap into this properly, it's gonna be massive. And I think they can. They got in bed with the right company, I think, with Epic Games.
Yeah.
So
And I see a lot of licensing with Epic Games for Star Wars, Marvel, like just a bunch of the IPs that Disney owns. They're just plastering into their games now for Epic.
wow, that's wild. Absolutely wild. Well, thank you, brother, for joining. If you let everybody know where they find you on social media.
Yeah, you can find me on. Sorry about that. You can find me on X at Mr Seymour Duck.
There he is. Make sure you follow Mr. Seymour Duck on X at Mr. Seymour Duck. He does amazing financial analysis for Nintendo, Disney, just all kinds of stuff. Make sure you check him out. He's family here on OG55. Thank you all so much for watching this episode of OG55. Comment down below with all your thoughts on everything we talked about. The earnings call with Disney. If you want to talk about Universal, the Warner Brothers stuff too, by all means, gaming, whatever you want to discuss, down in the comments down below. Just keep it civil. Thank you all so much for watching this episode, and have a wonderful, wonderful day.